All right, good morning, everybody. Today is Tuesday, August 19th. We're about to have market open, and let's see what we have here. Um, I will be, I need to copy this screen first of all, but let's see. Uh, all right, so the market open moved today, and I need to make a copy of this. Would be market open. Oh, give me a second. All right, let's see if we can get any rejection scalps today. So there is a 30-minute rejection scalp. However, we do have this bearish order blocks here. So I think the only rejection scalp I would take is this SAR rejection scalp that's here. Actually, even this one I wouldn't. Yeah, no. This one should be there. All right, so I will be taking some market open entries, but the goal is to take one market open. So if you look at this chart, right, you can see a bunch of market open markup entries that I backtested since the beginning of the year. Uh, and for this market open entries, so you're only looking to take one trade a day. So if we go all the way back to January, you'll see that I did some testing on it, and the statistics for it are pretty decent. So this is only taking market open entries. And for the market open entries, I'll also be taking two. Well, it depends, right? So there's two ways of taking it. So one is trend based, and the other one is based off of the reaction to any surrounding, like where price has gone, price is coming from. So, for example, you can analyze using the pre-market highs and lows, etc. So there are times when the two market open. So for example, today's market open entry, and this one I take it exactly at market open, so exactly at 9:30. So I know there was the other market open entry that I was talking about, like if, and for example, today was a good example, right? If price is above, or if the EMAs around price are mostly green, you're looking to buy. If the EMAs are mostly red, you're looking to sell. And for example, today, it would be if the candle before market open is not touching any EMA, you wait for price to come to the closest EMA. So for example, today's most of the EMAs were green, so you'd wait for price to come to probably the lowest, but sometimes it's not going to give you the most optimal one. So either this one or somewhere on this 30 EMA, and then you get in there. So that was the previous way that I was talking about. But that one doesn't give you an opportunity to enter exactly at market open. The one that gives you or would have given you an opportunity to enter exactly at market open is if the candle before market open is actually touching EMAs. But for this particular new way I'm entering, it's exactly at 9:30 a.m. So I just look at the trend on the 15-minute time frame, and then I go for a 1:2. So I'm going for a 100-point stop loss, 200 points TP. The second one is based off of this new kind of indicator that I'm working on. It kind of gives you a forecast on price, on where price is likely to head, whether bullish or bearish, but I'm still working on that. But for this particular, even taking out this new indicator or whatnot, just looking at the trend, so for example, today I'm in a buy. And you just wait for price to go either to your stop loss or take profit. So yesterday, the trade that I was in yesterday actually just hit stop loss right now for a sell. So one of it was for a buy, which hit stop loss by this manipulation to the downside, which I still think US30 will push to the upside, because if we kind of look at what we have here, we have the accumulation, then we have the manipulation phase, which is this big wick to the bottom. And then what we are seeing right now is distribution, which is why I still think US30 will push to the upside. But yesterday the market open for both the new, this new indicator. I don't know what I'll call it, the forecast indicator. So forecast indicator was for a sell. The trend yesterday during market open, you can see price was coming from the bottom. We had a bunch of wicks from the bottom. So yesterday's for the trend based was actually a buy, but I got stopped out of that. But last week, if we look at last week, on Friday, what is this? So the markups I have right now are based on the forecast indicator. But last week, I think I only had one loss for the market open entry. So I had four wins, one loss. There was a win on Monday, Tuesday, Wednesday, Thursday. Thursday there was a loss, and then Friday there was a win. So last week, I hit that 1:2. Even right now, the market open for the trend. So today's market open for the trend base, and the forecast base is for a buy. And right now, right, price is in profit. I just hit like a 1:2 risk to. I'm sorry. Right now, price is at a 1:1. So for this one, I'm just aiming to take one trade a day for the market open. Now, statistics wise, back testing since January, and I'll still be ta taking the scalps, right? But this is just like something just extra, just to catch on the way, as we trade every day. But, just as a heads up, statistical wise, whether it's the forecast method or the trend-based method to enter the market open entry, and I need to add the statistics for yesterday. So yesterday would have been a loss for either the forecast and either the trend. But for these trades, I was testing out with a 1% risk so that if you lose 1% because you're only taking one trade a day. If you lose 1%. If you gain, you make 2%, right? So, for example, like last week where I won 4 days out of 5 days, 4 days won, 1 day lost. That was like 8%, 7% gain in the whole of the week. The only thing to note is that there are periods where you'll get a losing streak. So, for example, um, when was this? Let me see. The heaviest losing streak was in May. In May, the trend-based market open entry had like 8 back-to-back losses. Um, and and January was kind of like a weird month. Of course, we know we had the US elections and everything. So January and February weren't the best. But in January, you had a back-to-back loss streak or losing streak of about 7 days with the forecast indicator or forecast method of entering market open. But all that to say is that for these market open entries, like just at least take with 0.5% risk. If you take with 1% risk, just know that since you're taking there are days that you'll have like 8 back-to-back losses. So if you're taking 1%, just know that you can easily blow your account in like 2 weeks, right? But if you clamp that down to like 0.5% and 0.5% risk, even though you have 10 back-to-back losses or losing days, you're only down 5%. And then, right, the losing streak at some point will end. And then keep in mind you have a positive risk to reward. So you have a 1:2 risk to reward. So you can easily get out of that hole. But just as an FYI, I don't recommend going for 1% risk unless you're comfortable, right? Being open to the fact that if you go for a 1% risk, and when that, I've only seen that losing streak and I'm just looking at my statistics here. I've only seen that losing streak in and January and May. So actually, that's not too bad, right? Even though you're blowing accounts, you'd have only blown an account or account twice. Now, on the flip side of that, so January, for example, in the forecast market open, you'd have been down -7% for the month of January. For the trend-based market open entry, you'd have just been down -1% for the month of January. In February, forecast way of entering the market open, you'd have been up 4%. February for the trend based, you'd have been down -8%. So that's why I was saying, like in January and February, there was kind of like a losing streak with both. So the losing streak for the forecast method, you'd have recovered because in February, the forecast market open entry actually had a bunch of wins. But in February, there was a losing streak based off of the trend method of entering the market open. So in February, you'd have ended up blowing your account if you're just entering on the trend-based method. Now, just right as a heads up, there are days where the market open, one of them will be a buy, one of them will be a sell. So the forecast might be a buy, and then the trend-based one may be a sell. And again, I have to separate accounts for entering them. So I'll be right taking sometimes both of them will align, which is a good thing. Sometimes both of them might be different. Uh, in March, you'd have had a net of 15 wins. So if you are risking 1% per trade, you'd have had a net of 15 wins with the forecast entry. If you're risking 1%, you'd have been up 15% for the month. You'd have been up 30%, no, 30% for the month because you'd have had 15 net wins. If you're risking 1% for the per trade, you'd have been up 15%. But anyway, so in March, there were 15 net wins for the forecast method. There were 9 net wins for the trend-based method of market open. In April, you'd have been up. There were 3 net wins for the forecast method and 6 net wins for the trend-based method. In May, you'd have been -3. There were 3 net losses for the forecast method and 9 net losses for the trend-based method. Again, in May, that's what I was saying. In May, again, you'd have, if you are risking 1% per trade, you'd have ended up blowing your account because there was a time there were like 8 back-to-back losing days for that. But if you are risking 0.5% per trade in any of these market open entries, there's no time you'd have blown an account, even with a losing streak. So that's why I don't really recommend 1% per trade. So maybe 0.5%. But if you do risk 1% per trade, just know that you can easily blow your account if you get into like a losing streak, which I've back tested and found those losing streaks. Now, the beauty of it is in June, there were 12 net wins for the forecast method and 20 net wins for the trend-based method. So that is to mean if you had risk 1%, you would have been up 24% for the month of June. For the forecast method, if you had risk 1% for the trend-based method of market open, you would have been up 40% for the month of June. So June was actually pretty good. June only had like 1, 2, 3, 4, 5, 6, 7, 8. So out of say 20 losing days, I'm sorry, maybe I would call it maybe, let me see how many trading days were in June. So in June, out of so 5, 10, 15, 20, 21. So out of 21 trading days, only 7 days lost. So if you're risking 1%, that is you'd have been down, right? 7% losing. But 21 minus 7 is 14. So 14 times 2 is 28. So you would have been up 20, 20 net wins. So out of what? Out of 21 losing out of 21 trading days in June, 14 days were profitable. So 14 days you would have hit that 1:2 risk to reward. July was also pretty good. July had 7 net wins on the forecast method, and July had 13 net wins for the trend-based method of market open entries. So June and July were pretty good. August is so far so good as well. I think August so far for the market open for forecast is so out of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Out of 11 days so far, 1, 2, 3, 4, 5, 6. Out of 11 days so far, 6 days have been losing ones. 5 days have been winning ones. But again, remember the winning days have a 1:2 risk to reward. So in the forecast method, you'd have had 6 losing days and 5 winning days. So you'd have been up, what is this? 2, 4, this is 8, 10%, 10 minus 3, 4, 5, 6. So you'd have been up 4% for the month of August alone so far on the forecast-based method. For the trend-based method, so trend-based method, same thing, right? 6 wins so far and no, 6 losses so far and 5 wins so far. So still up. You'd have still been up 4%. But anyway, so this market open one is just like one trade a day. So which is why if you're okay risking 1% for a trade, not bad, right? In a good month, you should be fine. But just know that there are times you'll have a losing streak, and if you're risking 1% per trade, you can easily blow your account in like 2 weeks or maybe 2.5 weeks. But anyway, coming back to the rejection scalps, right? So rejection scalps are still, right? We're still trading them. This is the basis of them, or this is the basis or my main entries that I take. So far, there's nothing for the rejection scalps. There was a pre-market high that was tested here, but of course you can see price already broke above the pre-market high. I don't take any rejection scalps based off of the pre-market high. So currently price is just being held down. We do have some high time frame bearish order blocks here. So of course we do have this weekly bearish high, this 4 hour bearish high and low. So it might take a lot of buying pressure to break this order blocks right here. And currently the market open. So today's market open entries were both buys, either forecast based or trend based. So trend based, you can see price had already picked up liquidity from. So here's the difference, right? So trend based, you can even just let me just take off all these indicators right here. So trend based, all you're looking at is the trend. So you can look at the trend on the 15 minute, you can look at it on the 5 minute. So all you're looking at is you're looking at price action, you're looking at the trend. So here, for example, this morning, if you're looking at for a trend, of course, you can draw, there's a couple of ways to identify trends, right? So one of them is looking at higher highs and higher lows. So if you're consistently printing higher highs and higher lows. So for example, if before market open, this is what is being printed, you can tell you're in an uptrend, right? Because you're creating higher highs and higher lows. Um, if you're in a downtrend, you would be creating lower highs and lower lows. So for example, if the trend before market open is this, then you're just looking for a sell. So you're looking to take a sell. If the trend is this, you're looking to take a buy, and that is, that's as simple as it gets. Now for me, there's more to that than just the trend. So for me, I'm looking for the wicks. Where are the wicks rejecting from? So for me, I'm even, right, for any of my indicator, or for the indicator that I use, I'm just looking at also order blocks, like where is price picking up, where is price coming from, right? So if price is in a downtrend and it's just come from a bearish order block, then that gives me more confluence. So for me, the market open entries, I really don't look at the zone. So remember, like how with the other strategies, we are only selling if price is in a supply zone, and only buying if price is in a no. We're only selling if price is in a supply zone, and only buying if price is in a demand zone. So for market open, I really don't look at the zone. So for market open, for me, I look at the trend, and then I look at where is price coming from. So for example, today price came down here, picked up, rejected off of this hourly bullish high order block, and then pushed up. And then further to that, the pattern here that we talked about, the accumulation phase. So yesterday price was trending for US30. I'm sorry, price was consolidating for US30, right? So when price is consolidating, you normally expect a breakout. And a good amount of times, the first breakout that happens is kind of like a fake out, or a trap to lure in people that think price is now going to break out in that direction. And that when that breakout happens, price comes back into the consolidation phase and then breaks out to the opposite end. Now, again, it doesn't always happen that way, but a good amount of times, once you see price has broken out and come back into the consolidation phase, then you kind of expect price now to go back to the other direction, right? So even for me, for the forecast based market open entry, like I'm looking for some of these patterns that are kind of showing me why price is doing what it's doing. Um, yeah, so that's pretty much it. So there are days for market open. On one account, I'll enter a sell. On the other account, I'll enter a buy. There are days where I'll enter both buys or both sells. So for example, like today, for the market open accounts, both of the accounts that I'm trading are both in buys, because for today, both strategies or both market open strategies were showing me that price is going to buy. But for the rejection scalps for today, there really isn't anything so far that has happened. So it's gonna take. So price can, of course, easily come back from here. The other thing that you can do to secure your profits for this, for the people who take break evens and partials, like if you hit a 1:2 risk to, I'm sorry, a 1:1 risk to reward, which this trade has already hit. And again, for this market open entries, unless I start a new statistic for, or a new area for recording them, like this is just a trade I'll just be taking like exactly on market open. So I really don't want to add it onto like the official trades, because remember for the official trades, we normally give ourselves like maximum three back-to-back losing trades for the day. Actually, for you guys, I do two maximum losing trades. So I really don't want to mix this in with the regular scalps that we take. But anyway, so when we hit like a 1:1 risk to reward, you can choose to set break even. You can choose to take partials. Personally, for me, it's either stop loss or take profit. I really don't do break evens. I really don't do partials. But that's just how I trade. It doesn't mean that that's the appropriate way to trade. But for you guys, for anybody who takes like partials or break evens, like once we hit like 1:1, you can decide to take your partials or break even. And also, there's definitely a lot I've learned. So again, like if I do this replay here and go all the way to January, since when I come up or when I try to find a new trading model, I backtest like the whole year. So you can see if we play this forward, you can see I literally traced every single trade. So there is a bunch of things that I've learned and a bunch of patterns that I've noticed for this market open entries. And as we go along, like I'll write, if I do see like some red flags or whatnot, I will communicate those to you guys. But there's definitely patterns I've seen. And let me increase, I guess that's a high speed. But you can see here, like I literally tested this out since January, and you can see I am going for each time I'm going for a 1:2 risk to reward. So there are days that are losing days. So for example, January, as I said, there were days that January wasn't the best performing month or best performing month, but you'll see like sometimes, and a good amount of this market open entries, mostly they hit TP in like an hour, which is good. And also, I think it's also a good entry model for some of the prop firms that require you to hold a trade for like at least 5 minutes or X amount of minutes, because it's not like our scalps where we are holding the trade for literal seconds. But yes, but this whole model and everything um there are definitely a lot of things that I've learned, a lot of patterns that I've learned, especially for the forecast entry. The trend-based entry is pretty much easy to get into, but the forecast method is kind of relative to somebody's analysis about where the market is coming from, what the market is doing. But again, anyway, for January, it wasn't the best month again because of elections. And so January and February, so of course we know the elections, we know the tariff news that came out in February and March. So January and February weren't the best days for all of these market open entries. But looking back, there's definitely things that I've learned that I know even if I went to backtest some of these entries, I would have a significant amount of improvement for some of these trades. So as you can see, there are days where the market open will just be ranging, right? So for this particular day here, 22nd January, which was 2 days after the election, I think, or 2 days after, I'm sorry, 2 days after the swearing in ceremony. Um, you can see this trade ranged for like a whole day. So similar to the market open for yesterday, the market open, and you can see the losing streak that I'm talking about, especially for January. So on this day in January, you would have had one, two, three, four back-to-back losing days, five back-to-back losing days, because this one would have just hit your stop loss and then pushed all the way up. Um, and then again, here's another losing day as well here. And again, right, January with the elections and the change of administration, there was a bunch of movements, regardless of whatever strategy you're using. But anyway, all this to show is that, right, back tested all of this from all the way from January, and there's definitely a bunch of things that I've learned that should be quite helpful in identifying the direction of the market open move. So again here, so still back to a 1:1 risk to reward. It is going to take a lot of power to break through these order blocks. Again, they are high time frame order blocks. But right now, my analysis is that today's market move is a buy, which you can see we are already going there. And it's as simple as this, right? When market opens, there are days where market is going to or the market is going to consolidate back and forth, but typically the market is going to move one way or another, right? So the market is either going to push up or push down, whether it's in an hour, whether it's in the next 6 hours, whether it's in the next 24 hours, right? So you want a stop loss that's wide enough for you to survive any manipulative move. And here we just formed an SAR level. So here we have the opportunity to take a rejection scalp here. So let me just mark up the 10-point entry here, 40, 45.5. So this would be 55.5. So something like this. And let's see if we get this rejection scalp. But anyway, so the logic behind the 100-point stop loss and 200-point TP, you want a stop loss that's wide enough to avoid any manipulative moves. So for example, we've seen instances where price has to come back. Okay, let's see. I am looking to enter, and I think we might have 45.5. 55.5. So, okay. So the 10-point entry is there. I'm in the 10-point entry. I am looking for. So we are still doing our regular scalps. So this is 1:2. So I'm in the 10-point entry. So we are looking for the crossover sell here and also the trend base. So let's see if we can get this. So remember, our official trade is the one we take for a 1:1 risk to reward. So we are looking for the red X, and this is just a scalp, right? So this is just a quick scalp, and we might get it here. Okay, there. So I'm in the crossover cell, and I am in the trend base cell. So remember, model 1, model 2, model 3. So for every trade I take for these scalps, I'm entering it 3 times. So for this particular trade, I am in it. I'm in 3 trades here. So there we go. So we are almost at a 1:1, but the one, of course, we follow for the official trades is this 1:1 risk to reward. And markets have definitely been have improved over the last week. So the last 2 weeks, right? If you guys remember, and I know we didn't do any live sessions last week, but the 2 weeks before that, I was in a losing streak and I literally had to lower my risk on most of my accounts. So I'm actually getting back to break even on a good amount of my accounts. But I have noticed, like yesterday, I had like 2 wins. I could have had like four because I missed two trades. But markets have started moving, started moving well again, especially now that we are leaving the summer markets and entering the fall markets. But markets have started moving pretty nicely again. They're respecting the SARs. Our price is respecting the SARs for the most part. Price is respecting the EMAs. So, markets have definitely improved compared to how they were in August. All right, so for this particular one, and hopefully this one survives here. If not, it's fine. We'll just wait for the next one, 143.2. Let's see. So 143.2. So this is the entry that we are in here. We just need price to push down, give us TP, and then for my market open intraday trades, hopefully We just keep pushing up. But the overall direction is a buy today, based off of the market open, SAR rejection scalp. All right, so there we go. Full TP, or almost there on the 1:1 risk to reward. It's almost there. We should get a big push up or push down. So depending on the slippage, but for me personally, I'm still in this particular trade, and I'm almost out for the 1:1 risk to reward. Let me not jinx it. There we go. I'm out of that trade. So what full TP on that? Full TP. So I'm still in the 10-point entry, and I'm still in the trend-based entry or trend-based accounts. But for the 1:1 risk to reward, which is the structure-based one, and it's the one that we use to track our returns, full TP on that particular trade there. And let's just mark this up. We haven't had a live session in a minute. Second. And I'll take a screen grab of this for my journal. Yeah, but the markets have started respecting SARs and EMAs a little better than how it was over the last 3 or so weeks. So I literally had to lower my risk in order to survive the back and forth in the markets that was happening. Anyway, let's record this. So this Friday we didn't have a last week as well, we didn't have any live session. Yesterday we didn't. Today 0.75% win. So we had started August with a couple of losses. So remember, right? Yeah. So remember on that first day of August, we had one loss. The other time we had two back-to-back losses. So at least today we've gone back and gotten something out of it. So I'm still in two trades here. I'm still in the 10-point trade. So again, the 10-point trade is always like a snipe entry. I normally go for a 1:2 risk to reward. The trend-based entry, I'm only looking for a change in color of the candle. So that tells me the trend has changed. For that one, I go for a 1:1.5 risk to reward. And sometimes the trend-based, like today, the trend-based entry and the trend change entry and the structure change entry sometimes happen on the same candle. So for example, like today, the color, the trend change candle and the structure change candle were the same candle. So for today, the trend based entry and the other structure change entry happened on the same candle. So there are times when that will happen. But anyway, I'm still in the other two trades, and hopefully we push down, hit TP for myself for those two accounts, and then go all the way back up. But the overall direction for today, based off of this market open, is a buy. And you can see we do have this bearish order blocks here, right? This, as much as they are low time frame order blocks, so it makes a little bit more sense for price to come here and have maybe a bigger rejection from here, if indeed price is going to reject. And I think we did form the all-time high. If I'm not wrong, this is the all-time here. This is the all-time high here, this 45,279. All right. So must have had a good amount of slippage on the trend change entry. Let's see, 20, 40. All right. And then I'll bring up these models again. Entry models. So model 1, model 2, model 3. So model 1 is the threshold. So you wait for price to get 10 points past an SAR, EMA, or pre-market level. If price reaches any of the levels, okay, full TP. I just hit full TP on the 1:2 risk to reward, and I'm just almost hitting full TP on the 1:1.5 risk to reward. So all my accounts are in green right now. But anyway, so Model 1, right? You're just waiting for that 10 point. So Model 1 will always give you that nice entry. You see how Model 1, we got that precise entry. We literally entered at the high right there. So when all goes well, the Model 1 gives you like a nice snipe entry. Model 2, you're just looking for a trend change. And again, all of these entries are on the 5-second time frame. Model 2, you're just looking for the trend change. So after Model 1 confluences have been met on the 5-second time frame, look for a trend change. For example, for me, you're just looking for the bar color to change. So if we're looking for buys, you're just looking for the bar colors to change from red to green. So you're looking to enter at the close of the first green bar or red bar. Then again, Model 3 structure change. So after Model 1 confluences have been met, on the 5-second time frame, look for a structure change, right? So in our case, you're just looking for a red X or green X. So if you're looking for sells, just look for the red X, and that's what Model 3 is what we use for our official trades. So just look for, if we're looking for sells, all you're literally looking for is the red X to show up on the 5-second time frame, and that's it. If we're looking for buys, all you're literally looking for is the green X to show up, and that is it. That is all you're looking for. I had introduced another model, Model 4, but I will scale back on Model 4. The Model 4 used to be or was a momentum entry, and it was like a 1:2.5 risk to reward, but and it would be running here. But the only thing with this, last week Model 4 had I think 7 back-to-back losses, and I can sign into my journal there. So for right now, and this is why I've started trading the market open entries. Um, as much as the Model 4, because the Model 4, you'd just be waiting for these signals, the sell signals or the buy signals. But I don't like models or trading models that have a losing streak, without a good recovery rate, right? So as much as for this particular model, I was going for like a 1:2.5 risk to reward. If you start getting into 7 back-to-back losses, and then the next trades are not like 3 back-to-back wins or 4 back-to-back wins, eventually you will find yourself right in a losing streak. And you at that point you're unable to even salvage your account. So for example, let me sign into my trading journal here and show you guys. Momentum change. So if I share my screen again, right? So this is that account that I had started to track the this is the account that I'd started to track the momentum change or model for trade, right? So you can see when I win, because I'm risking two. So in this instance, I'm risking 1% per trade. When I win one trade, and since this is a 200K account, when I win one trade, I win 10. I win 5,000, right? So you can see here, I lost 3 trades. And again, this is when the markets were just being crazy and rowdy. So in this instance, I lost 3 back-to-back trades. And of course, for me, when I hit 3 back-to-back losses, I call it a day. So this day I lost $6,000. The next day I had 2 back-to-back wins. So since I'm risking 1:2.5, or I have a 1:2.5 R, for that particular day, I made 10 grand, right? So for this week, I was up about $4,000. Now, look at the next week, which is last week. Monday, one losing day. Tuesday, a losing trade. Wednesday, 2 back-to-back losses. Thursday, 1 loss. Friday, 2 back-to-back losses. So last week, right, had just like 7 back-to-back losing days. So you can see that's about 14,000 and 40,800 because of the commission. Now, yesterday was actually a good day with this strategy, because yesterday, if we look at my other accounts or my other. So, for example, yesterday on the Model 3 account, I had two back-to-back wins. Um, Now, those two back-to-back wins, even on Model 4, here on the Model 4 account, would have been two back-to-back wins. So yesterday I would have actually been up 10,000 for the day. Now, the only issue is that you really don't want to get too much into this losing streak here. And I really don't like a strategy that has a bunch of losing streaks without a good recovery rate. So maybe it's because the summer markets were crazy and I didn't have enough data because, of course, yesterday, if I were still taking that model, I would have recovered 10,000 out of this $14,000 loss from last week. But I also want to diversify a little bit more. So you can see even the win rate, right? The win rate is 16%. So for any of my models, even when I have a losing streak, it really doesn't get to like the 20% win rate style. So for example, even if we go back to the Model 3, which is our official um or which is what we use to track our official trades, you can see if we do the setup here, there are times that I'll have a losing rate, right? Or I'll have a losing streak. So for example, you can see last week I was down about 2,500. The week before was actually not the best week for me overall. So this is when this is when most of my accounts were up. Most of my 200K accounts were like at 210,000. This is the week all of them came back to break even. So right now, this is the week I now scaled even my risk down. So I normally risk 1% per trade, but losing like 10% in 1 week across all of my accounts, I had now to even scale down my risk so that I can get back, a little bit to break even, and then I start building equity on my accounts. So for this week, even this particular day for this week, every day I lost for the Model 3 entry, right? One losing trade here, one losing trade here, one losing trade, three back-to-back losing trades, two back-to-back losing trades here, right? But my win rate is still high. It's still at 6%. It's still at 60%. It's still at 60%. So this market open entry is about to hit TP. So it's still at 60%. And I'm only using a 1:1 risk to reward. So as much as sometimes with Model 3, I'll have a losing streak, like the winning streak is much higher. So you can see the previous weeks, most of them were green weeks, right? 2K week, like in July, this is about what? 15,000 in July. In June, this was again about a 15,000 month. Same thing in May, right? August has been a little tricky, and you can see I'm recovering in August. So August, it looks like 456. I'm still down about 5,000 overall, but you can see the August markets are recovering here. But anyway, so Model 4. So if today again I would have taken Model 4, this would have been a losing trade. So for right now, I'm going to scale down on Model 4. I'm not going to be taking Model 4. And you can see price did pretty much as expected here. Again, we're in a bullish setup here. So you can see price came, hit TP on these three models. So hit TP on Model 1, Model 2, and Model 3. And now we are pushing back, as can be seen here. So this market open trades are still running. So again here, for this ones, personally, right now, I'm risking 1% on my main accounts, but the accounts that these are copying to are risking 0.5% per trade, primarily because also with this market open trades, there is a time that you get into a losing streak. But the best thing about them is that the losing streak, you get to recover faster compared to the recovery of the model for losing streak for it. Let's see. Trend here. All right. So let's see if we can get another entry. So for today, I don't think so we probably won't get an EMA entry. We probably won't get an EMA rejection scale because again, I think we are going for the all-time high on US30 and you can see there are no EMAs. So the closest EMAs are below price and most of the closest EMAs have already been tested. So I don't think that price, right, even though price comes back down to these EMAs that have been tested, we wouldn't be looking to trade them because price has already tested them. And also, since we are around the all-time high, we do not have, we don't have what? We do not have any EMAs that are above where price is at. So for today, unless we get another SAR rejection scalp, so the all-time high looks to be at 45,280 here. So unless we get another rejection scalp, I don't see any other trade here. So we'll just keep following this market open trade, but this should hit TP here. Should be able to hit TP. But anyway, I was talking earlier before we took the rejection scalp. I was talking about the analogy of the stop loss and take profit. So stop loss and take profit for the market open trade, you want a stop loss that's wide enough to avoid any manipulation. So you want a stop loss that once that stop loss hits, you just know that there's nothing that you could have done, that the market just went against you that day, if that makes sense. Because you don't want like a 40-point stop loss on market open, because during market open, a good amount of times you have high volatility on market open. So during market open, you probably don't want a 40-point stop loss on US30. You don't want probably even a 50-point stop loss. 50-point stop loss isn't too bad, but even for that, it's a little bit, the probabilities of getting wicked out and price going into the direction you expected is a bit high. So I think the sweet spot is 100-point stop loss. I think you can experiment with a 75-point stop loss. I think 75 points is good enough. So here's what I'll say. You want a stop loss such that if that stop loss hits, the probability is that if you had 100-point stop loss, it would have hit as well. So I think maybe a 75-point stop loss wouldn't be too bad. So if you're going for a 75-point stop loss and you're going for a 1:2 risk to reward, you'd have a 75-point stop loss and 150-point TP. So for example, today, if we had that, I think this would have already hit, right? Yeah, this would have already hit TP. But you want that sweet spot. So you want a stop loss that's narrow enough such that you don't get faked out by price and wide enough to make you survive any fake outs. So I think a 75-point stop loss is good enough, but for me, I'll stick to the 100-point stop loss, 200-point TP for that. Let's see. Uh, trend. Mm. Right. Right. So this one is almost at TP, and all my accounts are still running for it. All right, there it is. All right, one of my accounts just hit TP. So again, for these trades, you're literally looking to enter them at 9:30. So sometimes I'll enter them 5 seconds or 3 seconds, especially for some of my accounts I'm trading them, especially on Trade Locker, the slippage is terrible and kind of messes up my TP and stop loss. So for example, the on the Trade Locker accounts I'm taking them like 5 seconds before market open or 3 seconds before market open, because sometimes if I take them exactly at 9:30, like the other day I had, instead of having like 100 point stop loss, 200 points TP, one my stop loss was like 60 point stop loss and 60 no yeah, like 60 point stop loss and 220 points TP or something. But yeah, for the Trade Locker accounts, like I'm taking them uh like 3 seconds before market open. So most of the times, like the trend, if you're entering based on trend, like you can literally tell, if you're entering based on trend, you can literally tell what the trend will be. The tricky one to enter is the forecast. Like if you're trying to kind of see where prices come from, etc. So sometimes that is a little tricky to see because it depends also on your judgment on what you consider a weak rejection, what you consider an order block. But yeah, that one is the only tricky one to look for or to find. Today is what, the 19th? Huh, this one actually, this one closed out in profit. Nine, oh, dang. Let's see, blue. All right, so today is a win day. So today's would have been net 2 wins. So I journaled that. Okay. So, yep. So all of my accounts for the market open are up in profit. So that's it. So the market open, like literally, it's just one trade a day, one trade a day, and you're done. So it's either you hit -1 loss or whatever, you have like a -1 R losing day, or you have a +2 R losing day. And that's it. So this is even a good strategy for anybody even struggling with over trading, or right, because you're only looking to take just one trade on market open. Let's see with this one. And here, like if you look at this, so again, this is the statistics or these markups I have here, they are based off of forecast. So again, the forecast is kind of relative. Um, it's kind of relative to how you interpret what the forecast of the market will be. The trend one is not relative. The trend one is just looking at trend. But here, for example, like I think yeah, this one is a bit different. I thought I was seeing something else. But here, if we look at this, for the forecast entry, you can see the last, yeah. So if we look at the last 4 trades, so this one is a winning trade. Yesterday would have been a losing trade, whether you took the forecast. The forecast market open entry was a sell. The forecast, no, the trend market open was a buy. So both of them would have lost yesterday. So there are days where, even though the market open trades are going in different directions, there's days where both of them will lose. So there's days where the price will shoot up 100 points, come back to break even, shoot down 100 points. go back into break even, and then consolidate and eventually pull up one direction or the other. So yesterday was one of those days. So yesterday and today's the first day I'm actually taking this on my or copying these trades over, or actually taking them across all of my accounts, or across a good amount of my accounts. But yesterday was one of the days where yesterday was one of the days where one was a buy and one was a sell, and both of them would have lost. The previous day was an automatic loss. Right here, you can see price immediately pushed down, and this is when we were around the all-time high. And the day before was a loss, but the day before that was a win here, etc. So if we just even look at the last four trades, one, two, three, four, out of the last four trades, three were losers, one is a winner. So right now you just be down one trade, like if you're just looking at the last four trades. And again, this is the forecast. This is the forecast market open. The trend-based ones are a little different. For the trend-based ones, like for example, the trend-based one on the first day of August, both of them actually on the first day of August, both setups would have won. The second trading day of August, one of them would have won, the other one would have lost. The third day, both of them would have lost. The fourth day, one of them would have lost, the other one would have won. Yeah. So it's like you probably also want to do like me and have like two accounts and take one market open per account. 94. This is 90. Oh, wait. This one is different. Uh, I was hoping we get like another SAR rejection scalp here. Uh, let's see. Thirty-six. Right. I don't know if we'll get anything else here for the day. Yeah, I think today we'll just call it a day. I won't see. So since we're literally near the all-time high, I think the market is going to range a little bit before it builds liquidity to either go back all the way up or even, come back down from here. Who knows? But I don't see anything because even since the market is going back down right now, let's assume that it continues pushing down. We don't have any EMA rejection scalp that we can take because the nearest EMA that hasn't been tested is this 15-minute EMA 2. Again, that's next to a bearish order block. So let's even assume price comes all the way down here in the next 13 minutes, drops like what, 100 points or 200 points. I wouldn't even take this trade because I wouldn't take a buy when the buy is laying on a bearish order block, right? And then the vice versa too, right? Let's assume that price keeps pushing down and creates an SAR, right? For me to take any SAR, it would have to be in this zone right here, in this green zone. So that would mean price needs to drop about 200 points in the next 13 minutes. It is possible, but is it probable? I'm not sure, especially since we are 100 points away from the all-time high. It's a little bit of one of those areas that might just be, just cause price to be ranging because you probably have a good amount of buyers and sellers around this area. So other than that, I mean, today at least we had a win. Um, you know, Depending on if you took the market open entry, right? That one was a win as well. So depending on what trade you took, whether it's a market open entry or the SAR rejection scalp, and I'm happy the market is behaving again with the rejection scalps. But yeah, I really don't see any other opportunity that might present itself. But other than that, I'll see you guys back here tomorrow. Enjoy the rest of your day. All right, guys. Peace.